Not a great day on the markets. As you can see from the bubbles, it's red. It's a very bad day for people in Hex and Pulse and PulseX. And if you look at Bitcoin, we are now at 26,682. It's now, I put this line here because this is a key level for me. This is the 200 weekly moving average, which, as you know, I always say is the most important line for Bitcoin because it's the longest term trend line for Bitcoin. And you can see that we did break above it. And now if Bitcoin gets down to a certain level, which is, let's actually see exactly what that level is. That level now is 26,226. Then we've got to change our thesis to almost say, look, we're in a bear market. We're not actually in a bull market. This was a bear market rally and not actually a bull market. So this line is critical. And every day we're getting closer and closer and closer to the line. I think what we want to do today is we want to actually spend time talking about all the data that shows that we're in a bull market and all the data that says that we may be in this bear market rally, and then make a decision as to which way this is going to go. Because the one thing we do know is we know that right now, as the market is going down, the operating interest, okay, is so massive ramp up in open interest down here. So we're seeing much more people take positions. Now, are these positions expecting the market to go down, or are these positions expecting the market to go up? I think the best thing to do is to actually look at the data and then make a decision whether we're going to be going up or going down. I don't think we should base our decision just on price, because that's going to possibly fool us. And then I've asked a question on my Twitter this morning, and I had a very mixed response, and I want to actually talk to you guys about the response. The question that I asked on my Twitter is, if the FTX Exchange was sold off by the liquidator and started up again, which is, by the way, something that could really happen, would you use it? And in the beginning, everyone said, no way. And then as the day progressed and we got more and more votes, and so far we've only got 6,201 votes, people are saying, yes, the user interface was the best. So could this FTX thing actually be real? Because we know the liquidator is actually talking about it. And will it help people who had money in FTX actually get their money back quicker? So lots to talk about today. I really want to dig into whether it's a bull market or a bear market. I've got some Michael Saylor information here with me today. So yeah, I mean, I think let's get on with the show. All right, let me know in the comments below if FTX owes you money. FTX, let me know if you're one of the people that did have money in FTX. And let's decide whether or not we actually want the exchange to start up, because there is actually a unique opportunity that could happen if FTX does start up, and maybe it'll bring a lot more liquidity into the market very quickly. So we are going to talk about that. We are going to talk about whether we're in a bull market or a bear market. We are going to talk about the debt ceiling and where we're at with the debt ceiling, because the market could go down 18% or more, and that's the stock markets, if the US doesn't get their act together when it comes to the debt ceiling. And we are now only 8 days away before they are going to are reaching the end of their money, and they've got to get to some kind of decision, and they're playing hardball. The game of chicken continues. So let's talk about what happened last time that this happened, and what could happen this time. Anything else that we're going to be talking about today? Bull market. We're going to also talk about Ledger, and Ledger doing an about turn on their Recover product due to market pressure. And I wonder if it's a good thing or a bad thing. So if you're new to the channel, subscribe to our channel. We are growing every single day, thanks to you guys. Otherwise, do me a favor, like this content, help people know that we are back here. I actually want to ask you guys a question, because I have an opportunity to leave tomorrow and go to the Monaco Grand Prix and sleep on a yacht, on Harry's yacht. Do you remember Harry? Harry, the guy from that's a big investor in Phantom. So I have an opportunity to go to Monaco, to watch the Grand Prix, to sleep on the yacht, and to basically, you know how much I love Formula One. I'm a huge Formula One fan. and Monaco is one of the best races in the world. But on the other hand, I just came back from Miami. I'm exhausted, and I could be spending the weekend with my kids because I'm going to be gone again at the end of June for a week. I'm going to be gone because I'm shooting that episode, that series called Killer Whales. Remember that? It's like a Shark Tank for crypto. Bitboy was supposed to be on it, but he was kicked off. So for some reason, he was actually kicked off. And so let me know what you think. I'm gonna do what you guys tell me to do. Should I go to Monaco, sleep on the yacht? But that means that I'd probably miss a show. Probably miss Monday's show, and I'd maybe miss a show on Friday. I would pre-record a show for you guys tomorrow, so I wouldn't leave you guys in the lurch tomorrow. Let me know what you think. Josh, run a poll for me, please. Should I go to Monaco and take the weekend in Monaco, or should I rather spend the weekend with my kids and my family and take my kids and my family away to some beach town and just spend quality time with the fam? Or should I go to Monaco and then spend the quality time with the fam next week? I will do what you guys say straight after the show. I'm either booking a ticket or I'm canceling my flight to Monaco. Cool, let me know. All right, let's get into the meat and potatoes of the show. There's lots to talk about. Specifically, this level on Bitcoin, which is a 200-week moving average. Now, it's a very, very, very scary level, because to me, if we break down below the 200-week moving average, and I'm a real bull, I have to then say that the head and shoulders played out, which is what actually happened, and then we break down below the 200-week moving average, and then to me, that means that maybe this bull market, this was actually a bear market bounce, and we're not actually in a bull market. So that is where we're at today. Now, what's causing this? Why can't we break up above this level over here? Why are we stuck at this level over here? I think I've narrowed it down to a few things. The first thing that I've narrowed it down to is to potential sellers in the market. So there is a seller in the market. There is an address, and this address owns 52,000 Bitcoin. 52,000 Bitcoin is a lot of money. It is 52, it's about, what is it, $1 billion? It's about $1 billion worth of, it's about 1.5, almost $2 billion. Now, in the last 2 weeks, this address, which you can see on chain, if you actually dig on chain here, and I'm not going to bore you with actually looking at the on chain, this address has actually sold 20,000 Bitcoin, 2 times 10K transactions through Coinbase, and they still have another 32,000 to go. Now, this 32,000 Bitcoin effectively is another $1 billion worth of Bitcoin. And on top of that, you still have the Mt. Gox Bitcoin, and you still have the government Bitcoin that are going to be sold this year. Remember, both of those, the government has told us that they are selling this year. I think there was an announcement. I don't actually know if I have the announcement here, but the government has told us that they're going to be selling the Silk Road Bitcoin this year. And the Mt. Gox creditors, they have actually come out and said, look, we are selling this year. They said that we are going to start the distributions this year. So this overhang plus this current selling of Bitcoin in a market where there's no liquidity is keeping the price of Bitcoin down. And there's nothing we can do about it. That unfortunately, there is selling pressure, and we know there's going to continue to be selling pressure. We saw the selling pressure a long time ago. Second thing that is weighing on Bitcoin is the same thing that is actually weighing on the markets. But before I talk about things weighing on the markets, I do hear a lot of talk about bear market and how the markets aren't performing and how it's terrible in the markets and it's gloom and doom. But then the thing is, when I mute the noise from Twitter and then I go actually onto the markets and I look at the S&P, I do see that the S&P is here just under its 4,200, it's 4,129, which means it's 2% away from its recent high. And the last time that the S&P was at this recent high was in August. So don't tell me that the S&P is doing badly. The S&P is actually doing fantastically. The S&P is doing fantastically. The S&P right now, if I take the bottom and I look where it is, the S&P is about 20% off its pre-market lows. And if I look at where it is from the tops of, let's call it, was it January? I think it was November, but let's just see. Okay, no, the S&P top it is 14% away from its all-time high. So it's recovered very, very, very much from the correction. So don't fall for this fear-mongering saying that that all of it, that this is not that we are in a bear market, but there is danger looming on the horizon. What is the danger looming on the horizon? It's this debt ceiling thing. The Republicans and the Democrats are really, really, really engaged in this game of chicken, and none of them are giving up in this game of chicken around the debt ceiling. And so here is a great synopsis of the situation of where we're at. The Republicans, they are not making a deal unless the Democrats stop spending. They believe that there's a spending issue. The US, get this, the US spends 24% of its annual GDP. Okay, so this is crazy. On the other hand, the Democrats don't want to cut spending. They are addicted to spending. And I'm not with one party or another. I'm just saying the Democrats want to continue spending. The Republicans, they want the Democrats to stop spending, because the more they spend, the more they increase the debt. The more they increase the debt, the more interest they have to pay. And right now, they are spending so much on interest. They're spending over $1 trillion, or nearly $1 trillion on interest payments a year. They're meeting again this morning. They'll get together this morning. They're saying that the talks are still productive, but they're not getting anywhere. That's the problem.
But the problem is, I've been very clear with the president from day one. We're not going to raise taxes. We've got more revenue coming in to government in a 50-year average than any other time in the history. Only 2 other times do we have this higher percentage. But the problem is we're spending more than almost any time in modern history. So it's a spending problem. We should pull back money that's been wasted. We should help people get jobs by having work requirements. We've seen that work time and again. We should find ways that we cap the amount of spending going outlay, because the Democrats had spent so much. Even Joe Manchin had thought of that idea of a 1% cap.
So the reality is that they are collecting more taxes than they've ever collected, right? So imagine like a situation where you are collecting more income than you've ever collected, but you're spending more than you've ever spent. And so you have the highest taxes, you're spending more than you've ever spent, and now you've accrued this huge credit card bill. Now, I tweeted something last night, and for me it's so ironic, because if you are in the US and you want to get a mortgage or you want to get a credit card, the first thing they do is they look at your credit score. And if you know anything about a credit score in the United States, they are so sensitive to credit scores that even if you just apply for a credit card, like when I went to the US, so get this, I went to the US and I wanted to get a credit card. Now, before I immigrated to the US, before I moved to the US, I just sold my business. I sold my business for $150 million. I was quite a wealthy guy, okay? I went to the US. I can see you guys doing calculations about how much money I've got. But if you're going to do calculations, just bear in mind that I had partners, and bear in mind that I paid capital gains taxes and whatever else. So don't plug me at 150 million. Anyway, I get to the US. I go to Chase. I say, look, I'm a high net worth client. I want a credit card. You know what they say to me? You don't have a credit score. I was like, okay, well, let me just put money in the account. I've got a huge balance sheet. Amex, Swiss banks, South African banks, UK banks are all fighting for my business. I just want a credit card. Not a big credit card. I just want a credit card. The guy says, no, I can't give you a credit card. You don't have a credit score. So the next day I go into a furniture store and I try and buy a sofa. And the guy says, do you want me to give you one of our credit cards? I was like, yeah, give me a credit card. Sounds good. Then they do a credit check on me and I don't have a credit score. So my credit score goes negative because people are just checking to see if I have credit. That is how sensitive the US is to people's credit. And now the same people, get this, the same people that put these credit score measures into place and insist that you have a credit score before you can have a credit card are the same people that are managing the debt ceiling and have put the government into $31 trillion of debt. And these are the exactly same people. Anyway, rant over. Where are they with this thing? It's not good because they're dragging it till the end. And the problem is that the last time this happened, the last time that they dragged this thing till the end, markets collapsed. It was in 2011, and the markets collapsed, and the markets went down over 18%. That is what happened the last time that the government did not agree on a debt ceiling. It says, during the debt ceiling crisis of 2011, the S&P 500 dropped 18%. JP Morgan is saying that this time might be worse. They're telling their big clients to short small caps and go long on volatility as they think it will spike. You think this time it's different? You see, it's a game of chicken. Who gets hurt in this game of chicken? Who gets hurt? Well, the government doesn't get hurt. The big banks don't get hurt. The consumers get hurt. The consumers are the ones, the retail investors are the ones that are going to get hurt in this game of chicken that the politicians that they elected are now playing amongst themselves. Now, they will definitely agree because they have to agree. Because if you look at all the other times that there's been no agreement by the Democrats and the Republicans, that there's been debt defaults. I told you that yesterday. It was Argentina, Greece, Russia, Ecuador, and Zimbabwe. Okay, now, if you look at all of these countries, the reason why these countries actually defaulted is not because they were in a democracy and the two sides of the democracy could not win, could not agree, right? So you think about like, why right now are we having a problem in the United States? We're having a problem because the two sides in a democracy, which both own, say, 50% of the votes, because it's a very, very, very close ratio in the United States. The only reason why we're having this debt ceiling crisis is because the two sides cannot agree. It's not like in Argentina where they actually ran out of money and there was no way that they could raise any more money because no one would buy Argentinian T-bills. Or the same thing in Greece where Greece just didn't have money and no one would loan it money anymore. Or the same thing with Russia or Ecuador or Zimbabwe where these countries were literally broke, insolvent. The US is insolvent, we know that, but because they have the reserve currency of the world and because they sell T-bills, people will still lend the US money. Big difference. And so the only reason why we're getting into this debt ceiling crisis is because the two parties can't agree. What does that mean? It means that eventually they're going to have to agree. They're going to have to agree. That's the bottom line. However, when are they going to agree? Because we've got less than 60 billion left in the treasury and we're burning this money every single day. They're going to run out of money in probably less than a week. In less than a week, they are going to be running out of money. Now, when you ask Americans, what do you want? And this is CNN. CNN is a very left-leaning organization, okay? When they did a policy to ask Americans, what do you want here? What do you want from this debt ceiling? Listen.
Crisis, the debt ceiling.
Well, Jake, our brand new poll conducted by SSRS shows that a majority of Americans, 6 in 10 Americans, want to raise the debt ceiling only if spending cuts are included as well. So this is the McCarthy point that he's been making all along. Remember, months ago, the White House was in this position of no negotiations. A majority of Americans say, no, you should reduce spending as well as raise the debt ceiling. 24% say raise the debt ceiling no matter what. Only 15% say do not raise it. Let the U.S. go into default. And when you look at this question about what...
Okay, so we also know that 15% of Americans must be idiots because you cannot let the US go into default. If the US goes into default, can you imagine what happens if the US goes into default? I don't want to even manage it. But in this game of chicken, we can get volatility. If there is volatility, what do? You buy the fucking dip. You buy the volatility. Why? Because they're going to have to agree finally. I'm sitting here with a pile of cash and I'm saying, take us to the brink. Take us to the point where you cannot agree. Make everyone panic. And when everyone panics, that is when I'm going to deploy the last batch of my cash and actually start buying this dip. Because I still think that we are in a bull market. I don't believe this thesis that we're going to break under this 200-week moving average and that we're going back into a bear market. I think we are in a bull market. And I'm not the only one that thinks we are in a bull market. I want to show you a couple of other things that potentially show that we are actually in a Bitcoin bull market and that the cycle is actually exactly repeating itself. So if you go back 8 years ago, which is what our thumbnail says, if you go back 8 years ago and you look at the volatility, it seems that Bitcoin altcoins have been pretty volatile this year. But the 2-week Bollinger Band says otherwise. Crypto Bollinger volatility remains at depths not seen since 2015, right before the massive 2016 and 2017 bull run. So on the one hand, if I look at the volatility and I look at the Bollinger Bands, we are exactly repeating where we were in 2015, just before a very, very, very big cycle. We repeated exactly the same thing in 2020, just before we went into a very big cycle. We are exactly the same in the Bollinger Bands. That is the one thing that I'm now looking at that says, hold on a second, there is a melt up coming. Not the only thing I'm looking at, because I don't believe in looking at one thing. Next thing that I'm looking at is I'm looking at the Tether supply. Right now, currently, there is over $81 billion in Tether in the market, which means that there is liquidity in the market. There's $81 billion of Tether in the market, highest that it's ever been, okay? Remember also, the more Tether in the market, the more money Tether makes. The higher the interest rates, the more money Tether makes. The more money Tether makes, the more Bitcoin they're buying in the market. And remember, we started the show talking about an overhang, talking about who's going to buy the Bitcoin. One of the most logical buyers for the $1.5 billion worth of Bitcoin is actually Tether. And now there's $81.8 billion of Tether. Take that, multiply that by 5%, which is probably what they're making. That means they're making $4 billion per year. They said they're going to put about 15% of their money into Bitcoin. That means they could be buying around another $1 billion a year in the thing. Also, global liquidity is actually on the rise, and the global liquidity on the rise is actually a function of the Japanese liquidity. So Japan's liquidity is going up a lot. Japan is now, whereas the US is trying to tighten, we'll talk about that in a second. The US is trying to tighten. It's bullshit. They're not tightening. The Japanese are the ones that are increasing their balance sheet. But also, if you look at total worldwide global balance sheets, which is a function of liquidity, look at that. It's starting to go up. So there is a lot of liquidity. The Bollinger Bands are showing a compression. The Bollinger Band compression could mean that we're going to spike out of control. Also, when I look at the fundamentals of Bitcoin, and I look at the things that power the networks, look at the total transactions, the total transaction fees on Bitcoin. Look how high they've been. Okay, they've come down slightly now, but look how high they've been. They're at the highest points of the year. Look at the total number of transactions on the Bitcoin network. Look at where we're at. We're in the beginning of a bull market or potentially in a bear market, and we are higher than we've been. In fact, let's go together. Let's go back and try and find the last time we were this high. I mean, okay, so the last time we had a spike in transactions was in the lunar collapse, which was around the 2nd of May. And before that, when was the last time that Bitcoin transactions were actually this high? Look at that. The last time that the Bitcoin transactions were actually this high was on the 25th of June 2019. What am I saying? I'm saying here that the network, even in this bear market, is being used more than ever. Now, the value of Bitcoin is the value of the network. How many people are using the network? And right now, even though we are in a potential bear market, the network is being used more than it's ever being used. What does that mean? It means the fundamentals are really, really good. The price is just not following the fundamentals. What's the other fundamental in the Bitcoin network? We've got to look at a couple of things. We've got to look at how many people are using the network, how many people are hodling. Now, we know the number of hodlers now is increasing, and the number of hodlers is at higher levels than it's been. The other fundamental of the network is how secure is the network. So imagine you have a network that is having a lot of transactions and is very, very, very secure. And that's exactly what we have. In fact, if you look at the hash rate of the network, which is how secure the network is, Bitcoin hash rate now is at an all-time high, which means that the miners are investing in this network at an all-time high, at all-time high levels. Okay, that's where we're at. Miners, all-time high levels. And look, a lot of it is caused by inscriptions, ordinals, smart contracts on the Bitcoin network, which we've done many, many times. We've spoken about many, many times. In fact, I think we were the first channel that actually brought you that information. But either way, look at it whichever way you want. There is, right now, the network itself is the healthiest and the most used that it's ever been, and the hodlers are the strongest that they've ever been. That is from a fundamental point of view. If you want more information about that, yesterday we launched a video. This is the video. It's called "The War on Bitcoin Just Got Worse. Holders watch now." And we made a video from the Bitcoin event. Now, you should go and watch this video because you will never get better information around Bitcoin and where the Bitcoin network is than in this video. I did interviews with Arthur Hayes, as you can see. I did interviews with Udi Wertheimer about ordinals. Max Kaiser, another great interview with Max Kaiser. I did with Samson Mao, big Bitcoin maximalist, hates ordinals and whatever else. I even interviewed Ben Kahn, and Ben Kahn and I had a very, very, very good discussion around Bitcoin and where the market's going. So go and check it out. Go and check out this video. It's called "The War on Bitcoin Got Worse." It's on our channel. It is over here. This is the actual network. So go and check it out. All right. Also, I caught this interview with Michael Saylor, and I think it's important that we break down this interview because he talks about Bitcoin being in a bull market. Let's actually go through the interview and go through the things that he talks about and actually understand whether or not we're in a bull market based on what he's actually saying. So let's go through it. I did fast forward to when the alpha actually starts.
Cycle for Bitcoin, or do you not see that having any sort of impact on the run-up?
Yeah, I think the industry is going through growing pains. The bullish factors in favor of Bitcoin is if nearly all of the bad leverage has been squeezed out. Everyone in the business of shorting Bitcoin, rehypothecating Bitcoin, loaning Bitcoin, they've all been bankrupted. The remaining exchanges where you can short it are under massive amount of regulatory pressure, and if the regulators have their way, they would like to see all the Bitcoin derivatives markets offshore be eliminated. So I think Bitcoin's found the bottom. I think the leverage is out of it. I think we're on a bull run. I think bullishly, the FASB initiative to adopt fair value accounting is a very auspicious development. I think all of the migration of ordinals, inscriptions activity.
Okay, so let's talk about that FASB, what he talks about, and that is related to how companies in the US who buy Bitcoin account for Bitcoin. So right now, if you're a company in the US and you buy Bitcoin, you can only write down the Bitcoin in your books. You can't write it up. So if you buy Bitcoin at $20,000 and it goes down to $15,000, well, tough luck. That's it. You have to account for it at $15,000 and you have to take a loss in your books. But if it goes up to $100,000, then you can't increase your investment in Bitcoin. So now there is a proposal by the FASB, which is obviously being endorsed by Michael Saylor, to say that you will be able to write up the value of your Bitcoin. So that's the first thing. If it does change, it will encourage more companies to buy Bitcoin and put Bitcoin on their balance sheet. It's a massive reason why companies aren't putting Bitcoin on their balance sheet. So that's the first thing.
Onto the Bitcoin blockchain is a very auspicious development. I think the halving will be very auspicious. And I think the fact that the average media journalist and average investor knows that Bitcoin is the one commodity that the SEC is not going to regulate is an auspicious development. So I think the way is clear for Bitcoin to rally from here. I would be very skeptical of all the other crypto investments.
Okay, so what is he saying? He's saying, look, regulators in the US have basically said that everything that is not Bitcoin may be a security. And he's right. He's saying the only one that we know for sure is not a security is Bitcoin. And everything else is actually under attack by some kind of regulatory council. Bitcoin, unfortunately, they can't attack because there is regulatory clarity on Bitcoin. He also says that the halving is a great reason why Bitcoin is going to run. And if we look at the data around halving cycles, there is less than 1 year to the halving. If we look at previously what Bitcoin has done in the 1 year before the halving, first halving up 335%, second halving up 147%, third halving up 55%. So the year prior to the halving always gives Bitcoin great return. So that's one of the other things that he mentions. Let's carry on.
Like the futures market, whereas Bitcoin does seem to be firmly under the remit of the CFTC and thought of as a commodity, there's still this question around Ether. And so is the CME suddenly in violation of securities laws if like for a lot of the futures contracts that they offer, if the SEC makes this call that it falls under their regulatory remit? It seems like a gray zone still.
I think there's a lot of discomfort within the regulators with regard to the circulation of all the crypto asset securities, the operation of all the crypto exchanges, and also the circulation of the cryptocurrencies, the stable coins. And they're sitting out there in bulk, circulating right now, and the regulators want to figure out how to clarify and rationalize that structure while doing the least amount of damage. And that's not easy.
Something I've been thinking about a lot and talking to a lot of people about is this idea of Operation Choke Point 2.0. So, following the fall of SVB, Silvergate, and signature banks, we saw that two of the most important payment networks that were helping with after hours payment settlement, weekend payment settlement,
while we
fall
are
out. And I've been talking to a lot of crypto firms, and it sounds like
the market is dumping. So remember, I said to you, the key level for us is this 200-week moving average. Here it is. Here's that 200 weekly moving average. You can see it's right over here. It's this average right over here. We are dumping very, 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 very close to this 200-week moving average. We are now, the 200-week moving average is at about 241. We're at 26,390. This red candle has literally just developed during the show. So let's keep our eyes on this, because remember, this changes the thesis. This is, if this happens, we have to, if we break down below this. If I look at the bubbles, let's just see which ones are getting hit the hardest. Okay, wow. So the ones that are getting hit the hardest, Pulse, PulseX, Hex, everything's down. Phantom is down 8.8%. The reason why Phantom's down, I will talk about in a couple of seconds, because there is a rumor, maybe it's true, maybe it's not true, that the multi-chain team, which is the Phantom multi-chain protocol, it's like a DEX, which is a multi-chain DEX on Phantom, has been arrested I think they were arrested in China. Let's quickly see the traditional stock market down 0.62%. 0.62, the US tech, so down like 1% or just under 1%. So this is not being done by it looks like it's a Bitcoin thing around the debt ceiling. That's pretty much what it looks like. As I say though, the fundamentals look strong. As I say, the fundamentals look really strong. We are nearing the halving, etc. And it's not only Bitcoin, it is Ethereum too. So remember, Ethereum also right now has the highest staking rate that it's ever had. Remember, we thought that a lot of people would withdraw their stakes from Ethereum. Well, that's not the case. We now know that these people are actually restaking. And if I saw a visual, let's just quickly find that visual quickly. I had a visual that showed the staking versus the deposits. I don't know if I've got it anymore. Anyway, I don't have it here, but what we see now is that 15.4% of the ETH are staked. That's up from like that's up from like 7.5% when staking actually opened. So it shows that the opening of the withdrawals on Ethereum actually made the staking ratio high, and the staking reward also. If you're staking your ETH, you're getting 7.57% of your staking reward. So look, that's it. I mean, when I say that's it, on the networks are amazing. The networks are amazing. The networks are at both the two major crypto networks, both ETH and Ethereum, are at all-time highs. In terms of fundamentals, in terms of the price, right now there's price weakness. I think a lot of it has to do with debt ceiling fears and the fact that Bitcoin is at the top of the liquidity of the risk curve and also the liquidity curve. And right now there's not much liquidity on Bitcoin, because remember that we've had Operation Choke Point, and that has brought down exchange volume. But not only that, we've also had Jump and Jane Street, which were the two biggest market makers on the biggest exchanges out there, and they are out of the US market right now. So they're not operating in the US market right now. Look, I am keeping an eye on the Bitcoin price first, 26,349. You guys also keep an eye out in the chat. Let's just go through the next part, which is something that I did want to speak about. And that is this big debate. Big debate is, if you were a creditor of FTX, if you had money on FTX, and FTX was sold off by the liquidator and started up again under new ownership and new management. So let's say that, like, hypothetically, Crypto Banter, and it's hypothetical, I'm not in the race here, but let's say that Crypto Banter went and bought the FTX exchange, and they said, look, we will restart the FTX exchange. And if you had money on the FTX exchange, you will get an equivalent of, say, 50% of your money back, but you can only use it on the FTX exchange. You can't use it you can't withdraw it. You can only use it to trade on the FTX exchange. Now, that's not a really far-fetched proposal, because we do know that John Ray has spoken about the rebooting of FTX sometime later this year. When you looked at his breakdown of the amount of money that he's charged, you do see that he spent about 7 or 8 hours actually talking about the restarting of the FTX exchange. I mean, it's not a lot of hours. You think that he's probably charged millions and millions of dollars, and here there's probably 20 grand that he's charged to review the FTX 2.0 scenario. But we are also hearing that people are raising money to bid for the FTX exchange. And we know that FTX is also research on application access for new developers and costs associated. So now they're talking about getting new developers, and you can see update developer skill set and restart project plan. So you can see that there's stuff happening here to potentially restart the exchange. And 𝗕𝗏𝗏𝗡 is, I think, right. He says here, FTX 2.0 game plan, capture the unique market that only they can capture, no one else. This is claims trading, remove counterparty risk and legal headache for buyers and sellers, hundreds of millions looking to buy and sell. So what could happen is they could start up the FTX exchange, and they could let you trade with your old balance, or of a trade with a percentage of your old balance. Now the question is, would you trade? And initially when I did this poll, the answer was no way. But as the day went on, and in fact, where did this discussion start? We have a research call every morning. And I was quite vocal yesterday. I said, if you would ever put your money back onto FTX, you shouldn't be watching the show. I'll take that back, because this morning I was on a research call with our whole team, and I asked the team, I said, guys, like, they wanted us to run the story. And I said, guys, seriously, would any of you actually like put your money on FTX, back on FTX? And they were like, why not? It was actually a really good exchange from a usability point of view. People like Fred, people like Joe, all said it was our best exchange. We loved the FTX exchange. And then I was like, hold on a second. There are a lot of people, Fred, Joe, lots of other people on the research call, which said that they actually really loved the FTX exchange. And if the FTX exchange was under new management, not only new management, but also new regulations. So in other words, because of how bad it got hit in the past, it would probably be at a higher regulatory standard than everybody else. Question is, would you trade? And I think, let me know in the poll here, and if not, just go to my Twitter and just let's get this poll right. I really want to understand if people would trade on FTX. And the way I worded it is I said, look, would you trade on FTX? Yes, the UI was the best, because it seems like everybody that used the FTX UI was amazing. And another one, I said, no way. And no way means no way, they screwed me, no way, I don't trust them, no way, we know there's a back door, whatever it is. Whatever it is. Question is, would you trade on the FTX exchange if it was a reality? And I think it actually would be a reality. Now, Northrock says this. He says, as a 5-figure creditor to FTX, I support the FTX 2.0 strategy. No FTX 2.0 recoveries will go to bank accounts. With FTX 2.0, recoveries are credited as USDC on FTX accounts. People yeet it back. I think yeet it, I don't know what it means to say, into crypto, kickstarting in the next bull run. In other words, what he's saying is you're now going to release a whole lot more liquidity on FTX. And if you release all this more liquidity on FTX, if you do that, then all of a sudden you've got a whole lot of more liquidity in the market. And he says we should actually all be fighting for this. Now, I don't know, to me, it's the contrarian take, but it's an interesting take. And I think it's one that we definitely should be considering. Let me know what you think. Let me know what you think in the comments. All right, let's also talk about Ledger. So looks like they okay, I'm gonna be blunt with you. It looks like the same marketing person that worked at Budweiser when they made that transvestite ad. I think it's the same marketing person that went to move to Ledger. That's what I think. Why do I say that? Because what they did was so risky to try and get their extra $10 per user per month. And I understand why they did it, because they want to build an annuity business. Because a business that relies on selling hardware is a shit business. Like it's a shit business. That's what it is. It's a shit business. Why is it a shit business? Because you're just selling boxes. The best businesses in the world actually sell annuity revenue. They sell revenue that keeps recurring and keeps recurring and keeps recurring. Now, the backlash from the community was so big. And eventually, I think yesterday, I'm going to say this, I think you're going to laugh when I say it, but I think the reason why they eventually buckled was actually because Bitboy. Because Bitboy said he dropped Ledger. No, I'm kidding. He did say that. And you know what I said? Hold on, I'm going to show you this. I think Bitboy is... he says, look, they no longer support Ledger because Ledger shares your keys or could share your keys to the government. And where that came from is that the Ledger CEO was interviewed and he said, you know what, if we are subpoenaed by the government, we do actually have to provide the shards of your seed phrase. And I must say, from that point, I agree. If I bought a ledger, I bought a piece of hardware that no one in the world could crack. I could carry it across borders, and I don't want anybody to be able to have access to it. Now, when you tell me that the government can subpoena and then get the shards of my private keys, I am out. Okay, like I'm out. My wife is saying, I can't believe you said transvestite. What am I supposed to say? Tranny? I don't know. What am I supposed to say? It's a tranny. Yeah, I say what I think. I don't have a filter. I don't have a filter. It is what it is. I know that this is going to be banned on YouTube. I know, it doesn't matter. I don't care anymore. I'm like Elon. I say, what did Elon say? He had that famous line. He says, it's not about the money. Give me money. What is it? Power. Give me money. Give me power. I don't care. My wife says, say trance. No, it's tranny. Okay, anyway, let's carry on. So it does feel like they're buckled. Elon yesterday spoke about Doge in a Wall Street Journal thing. He looks weird. He looks like he's becoming more robotic here. I don't know. What do you think? You tell me what do you think? Let's listen to what he said about Doge. I take a lot out of this. They asked him, are you bullish on cryptocurrency? He says, I'm bullish on Doge. I'm like, yeah, but are you bullish on crypto? So I'm bullish on Doge. Listen.
Are you still a fan of crypto?
Well, I'm not advising anyone to buy crypto or bet the farm on, DogeCoin or anything like that.
Okay.
Don't bet the farm on DogeCoin. You might have been thinking, maybe you should, but let me advise you, that would be perhaps unwise.
Okay.
So DogeCoin is my sort of favorite cryptocurrency because it has the best humor and has dogs.
I did, however, look at the price of it yesterday.
You see, so he's talking about Dogecoin is my favorite cryptocurrency. Why? Because it has Doge. He's not talking about the fundamentals of cryptocurrency. He's talking about something dumb, which is quite disappointing. I don't know. Seems to be quite disappointing. What else is there? I did see this, and I love this chart. I think it's one of the best, most encouraging charts that I've seen in a long time. That is the DEX volume to sex volume is going up, which means that it looks like Americans with all this regulatory crap are leaving the DEXs and leaving the sexes and going to the DEXs, which is amazing because we actually want to be operating in the world where we deal only with DEXs. Even if you're a tranny, a transvestite, a transgender, whatever the hell you are, you want to be dealing with DEXs, not sexes. Yeah, you get it? So I see this chart here of the DEX volume versus the sex volume. And it's an encouraging chart for me because I've always said that centralized exchanges must be a gateway to get people onto crypto. But then what we need to do is we need to move on to decentralized exchanges. And specifically, and I'm not shilling a sponsor here, but you can do what you want. If you are going to be using a decentralized exchange, double protect yourself by using a VPN because a VPN masks your IP address. Now, a lot of people are using a DEX, like Uniswap, for example, and they think that they are anonymous. Now you're not, because the front end of Uniswap is actually a company. The protocol is a decentralized protocol, but the front end is a centralized company. And actually, I think the centralized company is domiciled in the United States. So look, I'm going to plug a sponsor here. I didn't do this to plug a sponsor, but I'm going to plug a sponsor here. And I'm saying, what you want to do is you want to get yourself a VPN and you want to mask your IP address. Like right now, this system thinks that I'm in Lisbon because I always do that. Why? Because I don't want people to know where I am. I don't want DEXs to know who I am. Because one day when they do get a subpoena, and if they do get a subpoena, trust me, they are going to give your details away. They're not going to say, look, no, we're not handing over James's details. James has $240 in Cardano in his account. We really can't hand over his details to the James. Why are you picking up a poll?
Fred left phone roll in your background.
Oh God. Okay. So just get this. It's like $3 a month, and you can mask your IP address. It's so easy to mask your IP address. $3 a month. I didn't mean to plug the sponsor. When I saw this chart, I just thought if you're trading on a DEX, and then the problem is that you're still revealing your IP address. Well, then why are you trading on a DEX? You might as well trade on a SEX. Trannies too. You can be dealing on a DEX. This video is so getting taken down from YouTube, it is ridiculous, right? But it's also airing on Twitter, and the thing is, on Twitter they're not going to take it down. YouTube's killing us for this video. YouTube is destroying us for this video. Another chart which I saw today, which I think is very, very, very interesting, is how Blur has absolutely destroyed OpenSea. Like, we all thought that OpenSea was like the king and whatever else, and then bang, Blur comes with their no royalties, no transaction fees, basically, and destroys OpenSea. So now you got to ask yourself a question: is Blur going to be the ultimate winner here, or is one of the other tokens actually going to do something amazing, be amazing, and basically like start this whole thing, basically start a war again? I don't know. Let's see what happens. All right, let's see. Is there anything else that's happening in the research group? If you guys have got any Q&A, now is the time to ask the Q&A. You don't have to shower me with money like an open fan stream, like some of the others. There are other streamers I know that sit there at the end of their show and then like loosen up buttons on their shirts and then expect you to shower them with cash to answer questions. I don't need the cash. Just answer. If you got any questions, we can answer them. While, no, there's nothing happening on the research group. Okay, except, hold on. Remember I said to you there's a move coming in Bitcoin. So Will Clemente says the same thing. He says, pretty major compression here on Bitcoin. You see, big move soon. Is this the beginning of big move soon? I hope, boom. Okay, we are now on the 200-week moving average. So look, what happened here was that this head and shoulders actually played out. That's if we are critical, we got to just say to ourselves, look, the head and shoulders played out. And here it is. Now, if this head and shoulders plays out, let's just quickly understand the implications. We've got to have a sober mind about this. So you would get a $4,150 drop from here. So in theory, this is all theoretical, of course, you get $4,150 drop from here. So your level is 23,206. 23,206 if this head and shoulders plays out. And right now it does look like it's playing out. So yeah. I see here a lot of people asking about the OKX giveaway. Okay, so we must, Josh, find out when are we doing the OKX giveaway. Somebody asked them, when are we doing it? Let's do it live on the show. Give away the Tesla. If you want to win the other Tesla, so super interesting. Let me just, while we have time together, geez, I'm getting wrecked in this competition. I was doing so well. I was like in the top 80. I'm getting wrecked now. Anyway, look here. So the guy that I met in Miami, he's actually winning the competition. He's got 1,325%. There is a guy behind him on 1,208%. So it's not finished. You can still enter. There's 8 days until this competition ends and you can win the Tesla. So don't give up. Don't give in, because this is this. There's 128 spaces left. You can win a Tesla, Rolex, or $20,000 or $10,000 here. Let's look at the markets. I'm not happy about these markets one bit. Is there news driving this, or is this, guys, research group? Hit me with news. Okay, open interest. Whoa. Okay, more people are entering. Here we go. More people are entering this market. This is all live news. I mean, none of this is obviously rehearsed or scripted, as you can see. ByBit open interest almost back to where it was before this long squeeze. Seems like a lot of longs instantly re-entering. Join his Telegram. Join Telegram. Good guy. Actually, really good guy. Also, I do actually now want to plug a quick sponsor. Now that everyone's here, I do want to plug two sponsors. One is Crypto Tax Audit. If you are American and you want to protect your portfolios, you go to these guys. These guys can help you save the most tax on your crypto profits, and you should be paying tax on your crypto profits. I know you feel that you shouldn't, but also they have this annuity product that if you keep paying monthly, and you can pay up to $50 a month, they will protect you if you do get an audit. They will protect you if you do get an audit. Now that's a great service. The other sponsor that I want to talk about, now this is a new sponsor of ours. And the reason why I want to talk about them is because they sponsored our BTC Miami episode. And as I said to you before, if you haven't watched the BTC Miami episode, watch it. These guys, if you want to get another passport, a St. Kitts passport, which by the way, in St. Kitts, there's zero tax. And this passport allows you visa-free access to 157 countries, including the EU and UK. You buy a timeshare in a hotel, you pay $200,000, and you get this passport as one of the perks. Now, they are giving me a passport. So I'm going to be one of the test cases for this passport. Yeah, but I think it's very cool for $200,000 to get a passport. I don't know where you live, but I think it is very good to do this. Okay, guys, research group. Is there anything happening on the market? Why is this market going down? Can someone please tell me why the market's going down, other than the fact that this head and shoulders is playing out? Don't all sit there at once. Everybody is so quiet. No one knows. No one knows. No one knows why this market's going down. Okay, well, the market is going down. The head and shoulders is playing out. Everyone says, yeah, I have no profits. I don't need crypto tax services because I have no profits. But if you want to support them, there's a link below for both of these guys. 200 grand to get a passport. My wife's actually asking me here, can I also get a passport? She just wants passports. She's applied now for Portuguese passport. She just wants passports and passports. Yes, love, you can have a passport if you want. We'll pay $200,000. We'll get a timeshare in St. Kitts. And you can also have a passport. Okay, are there what's the result of the polls? Am I going to Monaco or am I cancelling my flight? 56% say go to Monaco. What does my wife say? Face, what are you saying? Should I go to Monaco? I know she's listening because she's texting me on WhatsApp here in the background. 56% of the audience say I should go to Monaco. 44% say I shouldn't go to Monaco. Come on. She's okay. Now she's not replying. Now she's feeling a little bit, I think, embarrassed. She doesn't want to reply. Someone says, Linda says, you see, it's the women. The women are saying, please spend time with your family. The men are saying, go to Monaco and watch the Grand Prix. I'm tired though. That's the problem. I'm tired. I've been traveling and I'm jet lagged. My wife says no. And it's like, it's not even like no with like, it's like no. It's no. It's a flat no about going to Monaco. Now I'm so confused. It's more confused than ever. Oh man, this chart isn't looking good. I just wish it would just go down. Let's get it over and done with. Maybe the debt ceiling happens. The debt ceiling thing happens. We go down to 23,000. We all buy Bitcoin. The market flies again. Who knows? My wife says, okay, let me see what she says. I'm reading to you real time. She says, I say no. My son Benji says no. She says, stay at home. I guess I have to stay at home. I mean, now she pulled that son. She pulled that your kids are saying no. I guess I'm staying at home. And Raymond here says, we spend time with us. You see? Okay. Well, thanks for the help, guys. Anyway, I've got to do what my wife says, as you know. So, I mean, it was all, I just made you feel like you had control, but ultimately I've got to do what she says. You know how it is. Guess I'm staying home this weekend. Anyway, I will see you guys again, I guess, tomorrow. Until then, don't trade, my friends. Just stay out of this market.